down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
Okay, ladies and gentlemen, we're back in the studio with a celebrity, Pat Pointon, talking about private money. Everybody needs money. I need money. We all need money to buy assets. So we're going to dive right in. There's no introduction. If you listen to the last podcast, you know a lot about Pat Pointon. He has raised over $6 million for his real estate portfolio. He has a laundry list of people ready to loan him money for his investments. And we're just going to dive right into learning more about how to do private money. Okay, you mentioned earlier, but off the recording, what's the first steps in private money?
Well, I think the first step in private money is to decide that you're going to solicit people and tell them the story about why they should invest with you as opposed to investing in something else. So I think you kind of need to do your homework about what you could borrow from somebody. In other words, you get a subject house, even if you don't own it. This is an example of a house that I'd like to buy.
Okay.
It's $36,000. I want to borrow $28,000, and here's why it'd be a good deal for you. And write it all out on a piece of paper with a picture of that house and a description and address and so forth, so that you have something to show somebody if they were to ask you, what are you talking about?
Okay.
And then you get a copy of a note and mortgage. Now, you can go to most title companies, and they'll give you a blank one.
Now, you said 36,000.
I just picked a number.
But yeah, I understand. But you said 28,000. Do you want to show
I don't ever want
equity?
to borrow 100% of the price of the house.
Why not?
Well, because it's not good for the investor, and if it's not good for the investor in the event of a default, then the investor's not likely to do this. We're not selling stock here.
No, I understand, but if it appraised for 36,
let's say 36, and you borrowed 28.
But would you get it under contract for?
Well, no, I'm saying I bought it for 36. Maybe it appraised for 40 or something. I just picked a number out of my hat. But I never exceed about 70, 75%
of the value.
Right.
But it could still be a no money down deal.
Well, it could be. Oftentimes it's not, but it could be a money down deal, sure. Now, many times I'll get enough money to cover the actual purchase price and the repairs.
Okay.
Because I bought the house well under market. And the way I did that, it was a distressed property of some kind. So let's say that house in perfect condition is worth $60.
Okay.
I buy it for $36.
Okay.
I get the $36, which is still way under 75% of the $60.
Right.
And I get the $10,000 or $12,000 or $15,000 that I'm going to spend on it.
Okay.
So maybe I actually borrow $46.
Okay.
On a $60,000 house. Now, the investor is protected because it's a $60,000 house all fixed up, and I'm going to fix it up. So if he had to take it back or whatever, it'd still be a $60,000 house.
Sure. So that's why I was trying to say earlier that you can do a no money down deal.
You can. Sometimes you will, sometimes you won't. It depends on what you can borrow and what the repairs end up costing you and so forth. Now, if you're clever enough with your repairs, sure, you can do that.
Well, okay. So I was at a real estate conference last week, and I'm still trying to learn private money. That's why you're in here. I'm excited about our class coming up June 25th. But this guy approached me on my way to the elevator. And I didn't know how to respond. He's like, he was from San Antonio, Texas, so he looked like a Texan. He looked like he had money, but everybody looks like they have money, but they don't. And he's like, hey, if you ever need money, let me know. And I was like, okay, here we are. We're talking about private money. I need money. I have like 4 deals in the pipeline. I don't know if I can get the funding. I'm trying to get the funding right now. I'm trying to refinance. How do I handle it from here?
Well, I'd say, sure, I always need money. Every real estate investor needs money. The question is, you and I need to sit down and talk about what you're offering versus what I need and see if we can work out a fit. Well, why don't you let me buy you a cup of coffee or lunch or whatever, and let's sit down and talk. Now, he may be one of those guys, and there are a lot of them out there, they want to loan it to you at 12 or 15% or something.
Okay, they're everywhere.
You don't need that.
Okay. So I need to convince them or communicate to them, this is a safe investment. Hey, I want to borrow money at 6%, 7%,
8%, maybe even as much as 10%, depending on where you are in the process. Now, let me give you an example of what I mean. When I first started, I was paying 10 and 12%.
Okay.
Now, the rates were higher than they are today.
What were the rates then? Were they still 10, 12?
8.5, 9.5, 10 maybe. I was paying higher than market. The reason I had no track record. I had to get a few people on board.
Sure.
And so I started off with a higher rate. And as I built my track record and proved I could do what I'm saying I could do and I could be relied on and so forth, then each time I renewed at a more attractive, more close to market rate. Now today I don't even look at anything over 7, and most of my stuff's at 6. And it's because I can pick and choose, and some of my investors have left and put their money other places where they think they can make more money. And I wish them only the best. But, the price of money goes up and down according to how bad they want to loan it, how bad you want to borrow it.
Well, I want to borrow it.
Now, if you want to borrow it real bad, you may want to pay 10 or 12% because you got a great deal that you're about to lose.
Sure.
On the other hand, I'm sitting here. All my deals are financed. I don't have a deal in the pipeline. I ain't looking at anything over 6% because I don't particularly need it. You see what I'm saying? So you and I, while we're both private investors, are talking a little bit different story because of the amount of need that we have.
Okay.
So it's a negotiable market.
So how long does the terms of the loan, like,
I normally do mine for 60 months.
5 years.
5 years.
Okay.
Now, I amortize the payment as if it were a 30-year note most of the time.
So
and the reason is that'll have some pay down, and normally enough pay down to cover the cost of refinancing it or whatever. But now what I'm looking to do sometime in that 5 years is either put it on long-term
finance,
institutional money at a very attractive rate, or sell the property. Now, another thing I do sometimes I'll sell the property on an owner-carried note and make it come due about the time my balloon comes due, with the option that I may want to renew it for them at market if they want me to. So then what I do is I go out and renew the note either with that investor or a different investor for another 5 years. Then go back to my customer that's in the house and say, okay, I'll renew it for whatever the spread. See, I've got one right now I'm going to do that's, I think it's got a 6% loan on it, a private investor. I'm selling it on an owner carry with a 10% loan.
Yeah, I love those.
And so he's paying me $5,000 down on a $55,000 house, and a 10% note. He's paying me $1,800, $2,000 a year in spread, and with a 30-year amortization in 5 years, he hasn't reduced it $2,000. So it's a $48,000 loan when I renew it at whatever the market is. 5 years now, I love it.
And you don't have no maintenance.
No maintenance. Don't call me.
Yeah. Okay, so...
But I do keep the insurance in my name, and I'll let him put renter's insurance on it because if it has a fire or something, he won't have the money to fix it, and I'm going to have to fix it because I owe on it.
Okay. So, this guy in Texas, I talked to him over the phone. I got this great deal. It's a $100,000 house. I got it under contract for $40,000. It needs $10,000. Okay, I need to borrow $50,000 in closing at Old Republic Title.
Right.
You can wire the funds or a cashier's check, FedEx to my closer. Great. He funds the deal. I'm lucky. I bought this house, no money down. I'm doing my job. How do I make payments? How do I handle it from here?
Well, depending on how his payment arrangement works.
And
now,
what's the number?
What I'm getting at. Let's first go back here and back up a second.
Okay.
Is those funds in his bank, or are these funds in an IRA somewhere that have to be moved to it?
Well, we'll just forget the IRA. Let's just
say his funds in his bank. Okay. Then you're going to make the check to John Doe.
To him?
Yes. And then send it directly to wherever he asked you to send it, which would probably be to a P.O. box or a home address or whatever.
Okay. And then I just make a 15-year AM or whatever, 30-year, whatever he'll let me do.
Whatever you can do. Now, most people don't like to get locked in for too long a term. So I do a 15-year note. A 5-year note. It balloons in 5 years.
Okay.
But it AMs is 15 or 20 or 30 or whatever you want.
So they're basically on their mind, they're sheltering this $50,000 or $10,000 or whatever the number is.
It's a 5 year, like a 5 year CD,
right? And it pays out monthly,
exactly.
And so, is it simple interest?
Yes.
Okay.
So basically, what you would have in this scenario you just mentioned is we would have a 6% note,
okay,
for $50,000 secured by a mortgage on a piece of property,
okay,
of same address. Then the note would say it's a 6% note. It's paid out 60 payments of whatever that calculates out to be, $400 a month, just for argument's sake.
Okay.
And that note you sign at closing. The mortgage, that secures that note will have the legal description and all that in it, and the title company will file that of record and send it to him.
Right. So it's like a regular bank. So
and then you just make a payment to him every month.
So how do I communicate?
You list him on the insurance just like he were the bank. In other words, it'll say, for the benefit of John Doe and his successors or signs as their interest may appear on the insurance form. And so he will be on the insurance just like First Mortgage of Oklahoma City as their interest may appear.
Okay, so what is it like when someone's a new private lender and they're really insecure per se, like they're new? How do you walk them through it?
Sure, you have to walk them through it and hold their hand all the way to start with. Now, the first thing is you want to ascertain for them that the property is worth what you say it's worth. That's the first thing they're going to want to know.
Okay, so do you give them an appraisal?
You could do that. Many times I'll give them a copy of the tax assessment. I'll give them photographs.
Okay.
I'll give them a detailed explanation of what I'm going to do to the house.
Okay.
What I expect it to rent for, based on what others in the neighborhood have rented for or sell for, depending on what you're going to do with it.
Okay.
And I give them all that information without giving them an appraisal, because an appraisal costs you money. Now, if you want to have an appraisal done, that's great.
No, you pay for it. You as the investor pays for it, not the private, just like a bank. Okay. And so
I first convince them the house is worth it. No, and then I show them my paperwork, which shows them in the lender. It's blank. I mean, I've signed it, but it's all filled out. And this is what will be signed at the title company. And this is the lady at the title company that has done this for me before, and this is how you send the wiring instructions to wire the money from your bank to the title company. I'll never touch your money until after I've signed all the papers, and they filed them, and they take care of everything for you.
Right, and that gives them
security.
Stress-free, that the third-party closing company handles the whole transaction, and you don't have to worry about it.
Exactly. It's really simpler than it sounds.
No, it sounds. No, I understand. Now there might be some people listening to the show that have like $100,000 in the bank and it's not doing anything, and they want to loan it to you or me.
Right. Well, okay.
And we'll use it. You know.
Sure.
Okay. What else? What else do I need to know?
Well, let's say he's got $100,000. Okay.
Okay.
The best way you could secure a man with $100,000 would be with two $50,000 properties or three $33,000 properties rather than one $100,000 property.
Sure, it spreads his risk.
And that spreads his risk, and it is the way I try to do it. Now, unfortunately, it doesn't always work out that way, because I can only buy the good deal that I find. I can't just go out and buy three $33,000 deals because you happen to want me to do that.
Well, did they come up to you and say, "Hey, I have $100,000 to invest"? And
yes, so I normally put them on a waiting list.
Well, I know that's cool for you though, Pat, but that's not for everybody else.
But I'm saying is, then I should go out and look for a property, because I may or may not have a property.
Sure.
Just because they came up and say I've got the money doesn't necessarily mean I want to borrow it. I won't pay anything for it till I borrow it.
Do you do this? Get this up front? Like, how much do you want to invest? Do you get a number before you even get going?
Well, I always laugh. We call that my son and I used to call that found money. If a guy tells you he's got 100,000, he's got 500 or a million or something. He doesn't come in and tell you all of what he's got.
Yeah.
So if he tells you he's got $50,000, he's probably got a couple of $100,000, and he'll find some more money when he finds a little more confidence in you.
Okay.
You know, he gives you $50,000. You do this one deal.
Right.
3 months from now, he's liable to call you up and say, "Man, I've got some more money. You got any more deals?"
Yeah, because of the return.
He found some money after he saw it all work. You see what I mean? He didn't just come in and say, "Here's $1 million. Do as you please with it."
Right.
But he may have had $1 million. He's not going to tell you that. And I wouldn't blame him. I wouldn't if I were in his shoes. What you want to do is build their confidence. And the way you build their confidence is by doing exactly what you say or better. Underperform, underpromise, overdo.
Okay. And so how do you show that you have interest into the deal? Do you show them that is it through equity?
Let's go back to that property. That property, when it's done, is going to be worth $100,000.
Okay.
All right.
So I got 50.
You borrowed his 50.
Correct.
So whatever else is above that in its value belongs to you in the form of equity.
That's right.
Till you either sell it, rent it, whatever you do with it.
So the equity, in essence, is the skin in the game.
That's right.
Has anyone ever said, "Hey, can you put $10,000 down too?" Or, okay, you're asking him for 50. He's like, "Okay, I'll give you 40 if you put in 10." Has anybody ever said that to you?
I can't say that they have, although somebody might. And I go back to what I said a long time ago, SW, 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 SW. Some will, some won't. So what? Somebody else is waiting.
Okay.
I mean, I would say, that's a great deal. I'll tell my friends to see if any of them are interested. But right now, this is the deal I've got. If you want it, fine. If you don't want it, I appreciate your interest, and I go on to the next one. I write the deal.
Okay, you're in control.
If I'm not in control, I don't do the deal.
Okay, well, that's fair enough. You're the one that found the deal. You're the one that takes the risk putting it together.
And if a fella doesn't feel like he wants to go the whole amount, I can understand that.
Sure.
And I thank him for his time and send him down the road.
Okay, you sound confident. Obviously, you've done this 100 times or more. Is there a stream of private lenders, and how do you tap into that stream?
Well, no, I tapped into them because I wanted a volume of them, and so I used a local real estate radio show. That's how I tapped into it, because I needed to borrow several $1 million. I didn't want to borrow $50,000 here and $50,000 there because I was buying 2 houses a year. I wanted to buy 15, 20, 30 houses a year. So I had to have a bigger stream of investors than most people that do private money. It can be done with a small amount. It can be done with a large amount. If you're going to do the large amount, you're going to have to find a large amount of people that might do the loan. And that means you're going to have to talk to a large amount of people.
Sure.
I did that with a radio show. You could do that like we're doing it here with a podcast, perhaps. I mean, that's a possibility. I'm not sure that would reach people. Direct mail is a good way to reach people.
Sure.
And the way you would do it with direct mail is you'd put them on an ongoing mailing list. You'd buy a list of people that have the net worth to potentially have some investment money. I mean, there's no use, don't take this wrongly, but there's no use sending a letter about investing to 18-year-olds that are in their first apartment. They probably don't have any money to invest.
That makes sense.
If you're investing, you're mailing to the wealthier neighborhoods in town, to people 55 or older, they probably do have some money to invest.
Okay. Now, I've talked to a private lender before, and he only wants to loan at 12 months.
Okay. Well, he's primarily doing deals where they're fixing the house up and selling it.
So that's what his objective is.
He wants you to turn the money over.
And the reason why?
That I don't know what his reason is, because I don't know who it is. But
sure.
But it's probably that he doesn't want to be locked into. He doesn't like anything about your deal, or he wants to change the interest rate or whatever. Again, he's writing the deal. I'm not going that way. I'm writing the deal.
You're in control.
Right.
So I need to be in control and find the lender, the private lender, that's going to understand my objective.
Now, a friend of mine, he's pretty well known in the mortgage business. I won't say his name, so a lot of people would know him. But he says the first place you start is right around you. He said, do you have a father? Do you have a mother? Do you have any brothers? Do you have any sisters? You have any aunts? You have any uncles? Any of them love you?
Yes.
And he said, that's a nice place to start. Now, I did not do that. I have not borrowed one dime from anybody related to me in any capacity. Now, I haven't even talked to him about it, but many people do. And, it could be an excellent source. I've just never done it that way. But he has had some success at doing that very thing. Now, what I have seen people do with some success is a mailing, as I say, to targeted people. Now, the first mailing generally won't get you anything.
Now, isn't there some sort of a law like FCC or that you can't solicit?
No.
I don't know.
I'm not aware of any law. You can mail people anything you want.
Right, but I don't think you can strategically. My understanding, and I could be wrong, is that you can't straight solicit someone that you don't know. You have to know the individual.
Well, now, laws change all the time. I don't know. What I would think you could probably do is you could probably mail an invitation to these people to come to a seminar.
Right. Exactly. But
and that's what I would say that you do.
Sure.
You're not going to get them to read a letter and send you $50,000. I mean, that's just not going to happen. You need to get face to face with them. They need to buy into you. See, one of the things they're first doing is believing you know what you're doing, followed by believing that the property is worth what you say it is. And then they're likely to do it. So what I would do is I would send these kinds of people an invitation, no obligation invitation. I would do a seminar maybe once every month or 6 weeks, and I would probably send out 500-600 invitations expecting to get 20 people. But those 20 people are interested enough to come and hear what you do. Probably there's a loan or two in that deal. And how many did you say you needed? 4. Was that what you said? You had 4 deals working right now?
You're right.
A couple of investors might do all 4 of your deals. So it isn't like you got to fill the room up with 644 people to get your 4 deals. You see what I'm saying? So let's say you send out 200 or 300 invitations, and what you do is you have a seminar about what you do and explain it as well as you can. Hopefully have testimonials. In your case, since you've got a lot of property, I would have pictures of all the properties I own that give an idea of who I am and what I do.
Okay.
I would be shooting for a private consultation one-on-one with the individuals at a later date after the seminar, like the next day or the day after. I would meet them. I would buy them a cup of coffee. I'd take them around. I'd show them some properties. I'd show them the subject properties that you have ready to purchase and why they're good deals.
Okay. So it's almost like my bus tour.
Very much, only you're doing it one-on-one.
Okay.
You're building a relationship with this man or this man and his wife, one-on-one. And their pictures and all, and then you try to get them to do one deal. If that one deal works, you only have 3 left to figure out. I'd do another mailing. I'd do another seminar. I'd follow up and send the people that came to the first one at least an invitation to a second one to learn even more about what you do. They were interested enough to come once, they may come back.
Right.
Now, you're not looking for 7,000 people. You're looking for 6 or 7 or 8 people over a period of a year. Let's say you have 8 people, and each of them has $200,000. Well, you've got $1.6 million. Were you planning to borrow more than that this year?
Sure.
What I'm saying is, I'm trying to be facetious here, but what I'm trying to get you to understand is you do not need to fill the Cox Center in Oklahoma City with investors. Now, you may have to send several hundreds or even several thousand invitations over a year's time to get these 8 or 10 investors. They're not going anywhere. Next year, you get another 8 or 10.
No, this private lender, they're not investors in their mind. They're just lenders.
Well,
or
I always refer to them as investors. They've invested in a real estate mortgage.
So, I mean, that's a great idea. Should I treat them as like partnership?
Yeah,
I mean, is it technically
you are a partner. I mean, they provided the money. You provided the property and the expertise. You provided all the management skills. They're getting a fixed monthly payment, and you're getting the difference, and you're getting the equity.
No, I understand that for us,
well,
technically in our world as an investor, but
I
don't know
to
if
them
this
about them
80-year-old
as
lady...
being an investor. She's investing in a piece of real estate.
Well, some people get scared with the word investing. They can't. I mean, I like the concept. Like, I know that the younger gentleman I've been talking to about private money, he is an investor in Texas already. So it's just a lateral move. It's just, I have cash in the bank. I need to invest it. I know about real estate. I understand real estate.
Right. Okay. Well,
so
he'd
I'll
probably
definitely
be
loan him
fine
money
if he's not too expensive.
Right. Well, he just
want too big of a piece of the pie.
When I called him up and asked him, I said, "Hey, I need X amount of money," and he said, "For how long?" I said, 5 years, balloon or 3-year balloon." And he was like, I would prefer 1 year. And I could probably get the deal done, but, I still have banks and stuff, so I'm not at that point.
Well,
but I'm still trying to
Here's what prospect. I would do with that. If that's the only hitch you have, okay, I would come back and negotiate with him. And I'd say, let me do this. Let me give you your 1 year with the option to renew for 6 months in the event that I can't place the loan someplace else, because I'm going to place it someplace else.
Sure, with another private lender or with a bank.
Okay, that gives you a maximum of 18 months to find somebody else to do it. This was the first investor you found. You take him, you make this deal, you go down the road. Chances are, when your 12 months is up, if everything's going right, he doesn't need the money real bad, he's liable to say, what do you do now? I say, well, 3 years.
No, I love your...
And he'll likely renew it for 3 years, and you won't have to spend any money to find him or anything else. But if you don't, you've got all this time, and I would have somebody else lined up. I said, I've got a guy waiting to take it if you don't want to renew it.
Sure, create a
whatever
sense
you
of
want to do.
Create a sense of urgency.
It isn't that. He said was just what he wanted. I've got what he wanted. Now, I'm going to give him, because he was here first, the option to renew for 3 years, 5 years, whatever. If he doesn't want to, I fully understand. I've got Joe Blow over here who's ready. Now, if that doesn't happen, I move Joe Blow to a different house.
Sure.
That's all there is to it.
Because the minute that you know that you have...
You found this guy, and how long you been looking?
Relatively soon. I mean, I've known him for a couple of years. I've done...
But I'm saying is, you've met him, you found him fairly soon when you started thinking about private money.
Oh, yeah. He's
do you think you could find another one in the next 18 months?
Oh, for sure. I agree with what you're saying.
So what I'm saying is, but now what you probably do is use him as a track record, a starting place, and probably convert him into doing better deals with you. And he's obviously got a lot of money. So the point is, you might get him up to doing a $500,000 apartment complex with you. You don't know what you might get him up to at some point. I wouldn't let him walk if he's willing.
Okay. Let's talk about, I have run into other private lenders through the RIA.
Yeah. Oh, yeah. They're always out there, but that was too much of the deal.
Right. That was my question. They want 14% or 12%. How do I negotiate down on that? You
don't. You walk away from those people. They're going to go to people that are more desperate with less assets than you.
Or they're ignorant. Yeah. Okay.
No, you are a guy with how many properties?
100 and some change.
6%, man. Take it or leave it.
No.
What I'm saying is, you've got a lot of properties. You have a lot of net worth. You have a lot of experience. You're not paying usurious rates for your money. Now, if you had never bought a single investment property, you had almost no track record, and you were 23 years old and you wanted to get in this business, maybe you pay that guy 11% for your first deal.
No, I agree.
But you don't need it, and it would be a shame. And you don't have to negotiate with him. He should look at you and say, I normally get 10 or 11%, but for you, I'll do it for 7%.
Well,
now, then I might do something with him.
Well, just for me personally, I have been very fortunate with banks, and I haven't really needed, but I'm tapped out at this other bank, and I really don't want to refinance and spend $15,000 in refinancing, 15 properties and going through this whole drama. But I want to expand my portfolio. I want to grow. So I was like, well, I knew one day that the banks would cut me off sometime, somewhere. They haven't technically cut me off.
They just have slowed down because you've reached their lending limits.
They're lending. This one specific bank, yes, I have to go build a relationship with another bank, and I will. And usually when you want to build a relationship with another bank, they would like to do some refinance, kind of get the meat on the potatoes and rolling. But I was, I haven't really pursued any private lending. That's why I'm so excited about our class. I'm still learning. I'm like, I just walk up to people. I was fascinated. The guy walked up to me and said, hey, if you ever need to borrow money, I need to call that guy.
Yeah. Oh, absolutely. But, many times what I'll do is I'll meet people and they'll be saying something about the stock market or bond market or something. And I'll say, well, would you like to try a different way? There are some other ways to invest your money, and some of them are more secure than the stock market or the bond market. And I'd be glad to buy you a cup of coffee and show you how you can do that. Take me about 10 minutes. I even put that on a business card. I stand by all the time and say, this business card looks like money because it's about money. Mm-hmm. And I can show you in 10 minutes what I think is the best deal in America, and I can defend it against all comers.
Sure. That's why I'm in real estate. All right, we're running out of time, but tell me a couple stories or a story or one story of how you actually ran into someone and you started using them as a private lender for your...
Well, let's see. I run into them that are in the same family all the time. I get the first one, like your guy in San Antonio.
Okay.
And then I'll find out that his brother-in-law has 150, his grandma has 400, his uncle has 200, and I'll end up with them all loaning me money because the first one did and told them how good it was. And you don't have to sell any of the rest of them.
Sure.
It's just a matter of providing them with the service.
Well,
I've got whole families that 8 or 10 people in their family have made loans to me over the years.
Do you have like a party at the end of the year? Hey, come meet Pat.
I used to, but I don't anymore. I've gotten old and kind of just slowed way down, and I don't do things like that.
Well, how old are you?
68.
68, and you're still going strong.
Well, yeah, I'm better than I used to be. But anyway, the point is I used to hold some Christmas parties and things for them. But now I usually just meet them for dinner or breakfast or something, and we'll have a dinner meeting with one or two couples that know each other. Many times I get a couple referred to me from a couple that are already with me.
They want to just invest.
They're friends, and they talk about it, what they do. Or the other company talks about, I lost money in the stock market. Well, you ought to move over here and do what we do.
Sure.
That kind of thing. I have a lot of that.
So answer the question. I kind of veered off, but how do you run into someone, like someone new? Have it... And not the RIA. Everyone knows that the local
RIA is not your place. RIA are other investors. Okay. They want their own money. They aren't your place.
So tell me a story of someone you overheard something talking about the stock market, and then tell me. Well, and then all of a sudden you called them, they met, and then they loaned you X amount. Tell
I haven't done it quite that way, but I was recently at the Heart Rehab Center, and the director of the Heart Rehab Center said, "I understand you're the guy that used to be on the radio." I said, "Yeah," and he said, "Well, I've got 45 properties, and And he and I struck up a conversation. I have those kinds of incidences a lot from the radio. I had a lot of people call in off the radio and end up being investors. And I had a lot of people say, well, what do you do? I said, well, I own these rent houses. Anywhere I go, what do you do? And what do you do? And I ask people, and they say, well, I own these rent houses. I say, gosh, I'd like to be in real estate, but I hate rent houses.
Sure. There
you go. I say, well, how would you like to be in real estate with a guaranteed return and no work?
All right.
Do you have any money?
All right, this is exciting. All right, so next week or maybe even Monday or maybe even Friday, I think we should go into the whole presentation.
Oh, sure.
So
it's probably hard to do in 30 minutes. It's about an hour-long presentation.
Well,
we can kind of slim it down.
How about we slim it down to 45?
Yeah, we can probably do that.
Because I think the show should be quick and concise, and they want more, and they want to come back, and they can break it up. All right, well, anyway, Pat Pointon, he's speaking June 25th here in Oklahoma City. And if you want to learn more about private lending, you can also text us at ask545454, and we'll let you know what's going on. If you want to listen to other podcasts that we've had, radio show, and more stuff coming up, go to savvyradioshow.com. Thank you so much, Pat. It's been a pleasure.
And
to see you in a few more days. All right. Take care.